Welcome to the Transparent FX Academy. I'm Nick and I'm a top odder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about Euro USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of historical structure, support, and demand. In fact, what we can see is that every time that the market tested its zone in the past, it got rejected to the upside quite aggressively. We can also see how when the market tested the level here, it created a reaction to the zone by printing this green candle, and we can see how again this level was tested as support here and here. And since the last test of the support was just at the start of this month, we could expect more bullish price action to be created away from this area, as already happened in the past every single time that the market tested its zone. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, what we can notice is that we did have the creation of an M pattern in general. After the creation of an M pattern, what you would expect is for the market to complete the pattern at the neckline. And in fact, that is exactly what the market did. We had the move to the upside, completing this M pattern at the neckline. Now, since on the monthly, as we have just identified, we have the creation of a test of monthly demand and support, more bullish price action could be created away from the area. But in that case, we would also need to see a break above the resistance that we currently have around this area. So there is a possibility for some short-term correction away from the zone and then to see more bullish continuation. Dropping down on the daily time frame, what do we see? Well, here on the daily, first of all, I did speak about Euro USD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this move higher again from here. I explained all the reasons for which we could expect the creation of this daily higher high, which the market gave us. Then we had the creation of this M pattern, from which I wanted to see first the completion and then more bearish continuation. And the last time that I spoke about Euro USD was when the market was here, explaining all the reasons for which we could expect this rejection to the upside, which in fact the market has just given us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, what we can see at the moment is that in fact, the market has just created a strong impulse followed by the start of this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements lining up perfectly with this previous resistance turn support, creating confluence of support at this level, which we could in fact expect the market to want to go and test and then to reject to the upside. Because if the market will go and test this area, there is definitely the possibility to see some institutional longing of Euro USD inside of this area. So to see institutions adding longs and closing shorts. In fact, if we go and see what we have when it comes to the commitment of traders, so what institutions are doing on the euro, the first thing that we have to keep in mind is that if we're checking the data for the euro, we are actually already checking Euro USD because all currencies on this spot are traded against the USD. And what we can see here is that if we look at the net positions, we went from having 105.7k net positions all the way up to 151.8k net positions, showing how institutions have been moving to the bullish side of the euro, so to the bullish side of euro USD in the long term. This means that since this area is a quite strong confluence of support, if we will have a correction to this confluence of support, there is a possibility to see bullish price action away from this area. So if the market will actually correct to this area, how we could be approaching a potential reversal higher? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment I'm running a huge special promotion in which you have a big discount on the upfront price of the mentorship program from $497 all the way down to only $97, one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the mentorship program directly from your student dashboard and essentially move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So at least I suggest to go and check it out. The link is also in description at transparentfxtrading.com. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.